Back at 22 minutes after, billionaire energy investor Boone Pickens, according to two people familiar, is raising money and said to be looking to expand his energy equity fund and energy fund. Max Wolff, senior analyst at Beryl Consulting Group, tracks this area, and he joins us on set. Good afternoon.
Thank you for having me.
Hey, so are we? You got Boone Pickens, looking to expand into those energy funds that he's got. You track this area. I mean, what kind of flows generally, Max, are we seeing in this area?
We're seeing a lot of excitement from retail and in the alternative investment space, particularly some of the sort of high-flying funds. I think Boone doesn't keep that low of a profile, so he might be a fairly good exemplar of that process. And we've seen a lot of excitement in this space. We've also seen this space in our own Beryl tracking format go up a little over 21% year to date, so it's not so shocking that there's a renewed interest. And we see
it all has to do with performance, correct?
Performance certainly does tend to attract people. I guess honey being better than vinegar, or as they say.
Good point.
But I mean, we've also seen there's a little bit of a momentum urge that we tend to caution our clients against. But nonetheless, we've seen oil bounce.
You got to be careful about that, right? Kind of chasing the momentum here.
Yeah, we're paid to be worried. That's what we do at Beryl. We're paid not to be wooed by headlines, not to be wooed by high profile or jet.
So are you worried then about the significant amounts or the amounts of flow that you're seeing into these funds?
We are a bit concerned because we have a bit of a tendency to believe that, especially since the sort of very dramatic bounce off the February low with oil,
right,
and in the oil space, maybe a lot of the low-hanging fruit has been picked and eaten, and so a lot of the people raising in are going to have to stretch for higher branches and smaller fruits with more peck marks and frost marks, and maybe the easy money's been made, at least a lot of it.
And take a look at Boone's funds. I mean, they had a tough year last year, but his two hedge funds are up as much as 79% already this year. A reminder, especially when it comes to anything involving the energy space, that this is a very volatile group.
Absolutely. It's an opaque space that's moved around by global macro, global politics, local politics, and it tends to be a space where this kind of huge outperform might be an opportunity to keep risk and fat tail risk in mind and rebalance, and that's what our favorite people, our favorite investors tend to do, and that's what we caution our clients to keep in mind at all times.
And I know you can't talk about specific hedge funds, but in terms of your favorite investors, in terms of what they're doing in the hedge fund space, what are they doing? Where do you see kind of the winning performances at this point?
We see the winning performances being those where risk management is built into the portfolio allocation and the rebalancing.
So that means what? Break that down for me.
That means that if you've done really well in something, you're not going to decide you're going to keep doing really well in it forever. You're not going to be afraid to break from the herd, that you're going to be an active trader and you're going to have a lot of optionality and options to protect the fund's capital.
All right, so break it down. I'm just thinking somebody sitting at home who just buys stocks, or invests in a mutual fund. I mean, what strategies in particular are you noticing among the hedge fund universe that are really doing well this year?
We're seeing people doing really well in the oil services space, which tends to lag, but is also good for long-term plays. We're seeing people doing pretty well playing the climate change bill.
Oh, really?
And in the alternative space. I mean, it's been kind of starved for money and overfed on rhetoric for a long time.
So alternative energy and all that space? Or?
Yeah, that has certainly run up quite a bit, but there's some nice long-term there.
Right.
And that's really driven by Chinese and American political development.
Right.
So that gives a small investor a chance to keep an eye on the climate change bills, the decisions of the Chinese government, the decision of the American government to start putting its money where its mouth has been for a long time.
So you're seeing a lot of money, though, go there and do well.
And we do, and we think that small investors can do really well there, even on their own, because it's not so opaque and it's not a sort of spending war where the big research budget is a life and death type of issue, the way it is in the raw commodity space, which we tend to think is a very dangerous place for even small, savvy investors with teams.
The raw commodity space.
Yeah, that's a wild space. That's the Wild West. So unless you really want to be in the OK Corral, it may not be the place to saunter up to with your gun.
Anything else beyond the raw commodity space that you think that you're noticing in terms of the hedge fund strategies that are out there and you're tracking the performances that aren't doing so well this year?
We like people with a lot of embedded optionality who are ready to protect their portfolios and get out, because there's a lot of a trading rally going on here.
Right.
And a lot of what we see in the commodity space is a combination of two factors, and that is a way to short the U.S. dollar and a way to be ready for inflation. So a lot of people are doing some combination of going short the U.S. dollar and getting themselves ready for inflation. And when it all the dust settles here, if you're really, really long, especially on these prices right now, you believe in a robust recovery. So if somebody at home doesn't, they shouldn't be betting where their mind actually isn't.
Got it. Max, thank you so much. Thanks for coming in on this Friday. Max Wolff, senior analyst over at the Beryl